Today we'll understand the behavioral finance theory and the calculation or the measurement of the behavioral finance parameters through the questionnaires. So this is interesting because the behavioral finance theory seems to be very interesting, or these are very subjective, these are very emotional, hypothetical, and these are very uh, it's in the mode of very uh, imagination or uh, and measuring this attitudinal and emotional parameter and something which is not material is not that easy. So testing the concepts of behavioral finance, and I'll do it by taking an example of the mental accounting. So let us say one example, identify the bias in the case one. The Ramesh and Resma are a couple and both are executives working in a reputed bank. Ramesh started stock trading and being an executive in a bank, he is confident and Ramesh feel okay, I can do a good amount of uh, earning just by doing the stock trading, and with this time or subsequent time period, Ramesh feel rather let us explore some career in stock market. So he started devoting more and more time on the stock marketing, and he got addicted also because he started getting good amount of profit. And it was 2005, 6, 7, and all of us know it was a boom period, one of the boom period of stock market, and he earned good amount of money. He left his job, but he was registered, and his wife was reluctant. Resma was reluctant for the Ramesh that you should not leave the job. You should continue with the job instead of leaving the job because Mumbai expensive and stock market is very uncertain and nobody knows. So, but Ramesh earned good amount of money. He invested around 2 lakhs. Within a span of 10 years, he earned 60 lakhs around. But due to the downturn and recession in 2007 and 8, he lost a good amount of money. He almost lost all his earning, all his profit. Now his wife filed a divorce petition on the ground that his husband lost rupees 60 lakhs and accordingly she should be compensated. And Ramesh is in puzzle and is in great problem. And Ramesh now claimed that no, if at all my marriage is going to dissolve, then my claim amount of Resma should not be more than rupees 2 to 10 lakhs. So, whom do you think is correct? Choose one option from N. So, when Ramesh says the amount is close to 2 to 10 lakhs because he started his investment with 2 lakhs and leaving behind a breathing in 10 years. So, even if you add some sort of the interest rate trend, all it cannot be more than 10 lakhs. So he is telling, okay, in 10 years, even if you take 5 times, it should not be more than 10 lakhs. That should be the claim amount. But Resma is telling, no, my husband has lost 60 lakhs. I should be compensated on the basis of 60 lakhs. Now you tell who is correct. Uh, so most of the respondent, when we collected this research and we got the result, most of the respondent give the idea, no, it is 60 lakhs. No, it is 2 to 10 lakhs. So they went in the favor of the Ramesh, and most of the fund manager, even the investor, they protected Ramesh. Ramesh should not pay more than 2 to 10 lakhs. But you just think when a person start a job, he start a job with zero investment. and he start a job, whatever the investment he did in education, but he start in almost handed in the job. Within the span of 20 years or 30 years, he earned crores of amount. Now, in some cases, because of the stock market investment or because of some reason, whatever reason, if he lose some the money, instead of 1 crore of his whole PF amount, if he is getting just 50 lakhs or his amount is getting 50, now what he will tell? He has lost 50 lakhs. What will he say that? Will he say that no, he has not lost anything, and he has just because though he is whole life, job, labor, and hard work, now he earned 1 crore rupees. Now, if he will waste the amount, so then people will tell that yes, he has wasted 50 lakhs because he has earned 1 crore. So, this 1 crore, whether it is earned through the stock market, whether it is earned through your hard work of 30 years of job, it is immaterial. So, this 60 lakhs out of your loss aversion, people do not want to accept the losses. They want to they want to get rid of regret aversion. So, they want to get rid of the repentance. So, they do not want to accept the situation. So it makes Ramesh more light and easy, relaxed just by thinking that I've just started my investment career with the 2 lakhs, so it should be 2 lakhs. But as for the accounting, it Ramesh is lost 60 lakhs, and the reality Ramesh is lost 60 lakhs, and he should take the ownership that. But in stock market, people used to do, and this is the regular phenomenon. And let me give another example before. Husband and wife had been to Las Vegas, and they went for some sort of, then they went for gambling. So while gambling, they have a planned holiday of 7 days, but now they lost everything. Now husband is in deep puzzle, what to do? So in the night, husband again he tried to experiment and play with his luck, and he was left with the $5. He went and he started his gambling in the night with the $5. So at the mid of the night, by 4 o'clock, he earned almost $5 million. Now the with the $5 million, he want to bet further because he get a sense, a intuition of certain numbers, and that number started clicking, and that because of he thought it is a magic number, and that number helped him, and from 5 he earned around $5 million over the night. So then but he felt, okay, I did so much, okay, I put the last bet, then I'll go for the sleep. So then in the last bet, when he approached the owner, the owner told, no, we do not have such facility, you can move to the another place, and that is the big casino, and our whole security and all, they will take you, and they will they will, yeah, introduce to the owner of that casino. So the Mercedes came to, security guard came, because he is now the owner of $5 million. It's a big amount, and he went to with the all salute and all respect. Then he bet for the $5 million, and he used his magic number, but now he lost the whole amount, and he returned empty-handed. Now, wife asked, "How much money you earned?" He told, "No, I lost $5. That's all." But this is the way the whole loss aversion. You need to understand how much money he lost. At $5 million, he could have made a self-restraint. he could have come back to be the owner of $5 million. So this is the way in the stock market people used to be regret aversion, and they used to have a different mental accounting about their earning and losses. Let us go to the next, the sunk cost fallacy. As the president of a defense manufacturing firm making aircraft, you have invested 90 crores of the company's money into a research project. The purpose was to build a plane that would not be detected by a conventional radar. In other words, the strength stealth plane, and when the project was 90% completed, another firm began marketing a plane that cannot be detected by radar. Also, it apparent that their plane is much faster, far more economical than the plane your company is building. The question is, should you invest the last 10% of your research fund to finish the stealth plane project, or should carried away by the market dynamics to stop the project before end? So this is the question by Tyler. You will continue and complete the project. Hardly 10% is there, not to be dictated by the market, or you will stop the project. 90% told we will continue. That is the biggest sunk cost because of the past wrong decision, bad money. You want to put more bad money and want to play with the market, and you make even more losses. So even the gambling, when you person lost something in casino, he felt that okay, I've already lost $10,000. Let I'll recover this $10,000, then I'll get out of this casino. So in the process, he get bankrupt. So sunk cost fallacy. Whatever we have done wrong, then we have to accept. We have to stop. Suppose The third, suppose your regular annual income is 30 lakhs, and at the end of last financial year you received unexpected additional income of rupees 10 lakh out of stock investment. Out of additional 10 lakhs income, how much would you like to bet on your additional stock investment? Write the amount and the figure. So most of the tell that will out of 10 lakh will be spending reinvest 7 lakhs. Suppose the same lakhs, so your income is here not 300 lakh, it is 30 lakhs, and out of this 30 lakhs, suppose at the end again you get a unexpected earning of 10 lakhs, you get additional earning of incentive, or you have worked overnight because of overtime and all, because of your hard work you got another 10 lakhs, and it is hard money. How much you like to spend? People used to say hardly 2 lakhs. So same amount of money, but different source of income. Market is same, everything same, but people should same say rationally the same amount, whatever may be the source, but the source of fund used to dictate. Similarly, you are being gifted by 30,000 by in the first anniversary. So this question, if you can check, these questions are not direct. So this indirect kind of questioning through which you are trying to measure their different biases, and you want to evaluate those different biases through this. So you go through these questions and you will understand these questions are so indirect, and these questions are indirectly catching their behavior or the pattern. Suppose let me give the last question, the endowment bias. Suppose you inherited 1000 share from your father of jet company where he was doing his job. You have a lot of memory attached to the company in terms of your education trends. Now it is just 2% of your entire portfolio of equity investment, 1% of your wealth, and currently it is losing its value. What do you do in such a scenario? If it is losing all its value, so you will not mind selling the share. 2% is not a big amount. I'll keep on holding because the memory, and that is more useful, and that is more important than the money, and he will hold it with the expectation for the turnaround. What we found, people say that no, will not sell. Many cases, and many also tell around 20-25% no, will sell it out. So means people are having emotional attachment. Don't have emotional attachment with your investment. Similarly, the emotional attachment is by these questions go through. So you'll understand after gauging, we got some theories. Those are connecting these different biases of investment in their normal life. So after those, loss aversion is the sunk cost fallacy, emotional attachment in the stock, emotional attachment in the normal life, stock investment approach on the basis of source of income, and the behavioral and this model. These are the different models construct or the variable. So on the basis of those variables, so the variable of normal life, biases in the normal life, the mode of payment, biases in the source of income. And for all of us for this session, go through the various research papers on the behavioral finance written by the Terence Rodin, Thaler, Seyfried, Debon, Kahneman, and identify the dependent and independent construct, all the variable and the theories in the model in those research paper. Do at least for the 4 papers, and in the question, how to frame questionnaire for the behavioral finance. So you can do it for the overconfidence and loss aversion bias. So in the video, how Isma and Ramesh related to what kind of bias they are suffering from. In what respect aircraft companies was mentioned in the video. What are the questions to detect the endowment bias in the video? So this is the question for all of us, and let us complete the class here. Thank you. Thanks for your